Hello, everyone. Welcome back to the Rational Investors Daily Brief Recap. The fastest 10 minutes in crypto and stock market, too. I've got the mayor of Vienna here helping me drive the bus. If you hear blings, that's Alex's polite way to say, move on, Brian. We got work to do here. So it's about quarter past the hour here on Monday morning. Happy Monday, everybody, by the way. And hopefully we'll be done here by the bottom of the hour. So first things first, as we sort of talk about on a regular basis, and it's always a good idea because basically the US dollar index is this sort of benchmark that these capital markets are based on for now. I know a lot of people would like to see the world move away from that, but nonetheless, we painted a really interesting empire pattern here this past week. And we'll talk a little bit in length in a moment about some of the drivers of what's going on here. But long and short of it here, the perception in the marketplace that the Fed is actually falling behind the curve. Deflation is starting to take over again. Maybe the Fed raised rates a little too fast. The bond market might potentially go into inversion. All those kind of fun things has really sort of brought a grinding halt to the US dollar index rally. As it stands right now, you can see we opened up this week with an inside bar, so there's no sort of fireworks to be mentioned just yet. And we'll probably keep this on for future reference. If we do go through these lows here, that will be our empire pattern. Boom, boom, boom. And that will represent a sell signal on the US dollar index. So let's keep an eye on this. We'll see how it goes. Only time will tell. I suppose you can see there's a cheeky little gap right here that needs filling in. So it doesn't surprise me if we do lose this empire low that we're probably going to come back down against these tails very quickly. And then also too, if we zoom out a little bit, I think you can all see we did a fairly sort of textbook counter trend rally against the highs, rallied into Mountain Man, and are waffling here. So if we were going to see signs of failure, this is pretty much exactly where it should happen. If we go like that. And then conversely, if we're thinking about levels to the downside, and this is assuming that these lows hold, notice, 61.8 to 78.6. 78.6 actually lines up perfectly with that previous double bottom. So don't be shocked, everybody, if you happen to see, let's just change that to green. If you happen to see that this empire does fire here, that we zip down into this reload zone here a little bit lower. Wouldn't surprise me one bit. So keep those levels and those references in mind going forward. Now, what are some of the drivers in the world going on right now? We did have a pretty big fundamental event in that the Chinese have devalued their currency. We talked lots about that in the Broiler Chicken show yesterday. We talked lots about it in the Daily Brief this morning. I won't go necessarily into the Chinese currency into itself, but at the same time that they're devaluing their currency because they're worried about the economic condition within the country itself, we also have some serious political instability going on there. Keep in mind, everybody, China still is a totalitarian dictatorship. You can call it communist, you can call it Politburo, you can, put whatever lipstick on this pig and try and make it look as pretty as possible. But at the end of the day, I need to understand it is not a free society. It's not a democracy. And this Hong Kong situation is starting to get a little bit out of control. I talked lots in the Broiler Chicken show yesterday about things like Lebanon, how it used to be called the Paris of the Middle East. We talked about Sarajevo and how that used to be called sort of the utopian model for the future. And you look at both of those, well, not so much nowadays, but like 10, 15 years ago, Sarajevo was an absolute disaster. And Lebanon still hasn't really recovered. So, I'm not saying it's going to happen, but there is definitely a high chance that Hong Kong and the way the path that China is going down right now, could deteriorate into civil war. I think what's ending up happening to a certain degree is we're having a massive flight to safety. And the problem is, what's safety in this world, right? And as I have on the chart here, I think these are primarily the market safety proxies right now. The Japanese yen, I think, especially if you're worried about deflation starting to take over and the Fed's gone too far and they have to start to panic lowering interest rates, the Japanese yen is starting to catch a serious bid. And keep in mind, through the financial asset crisis in 2008, the Japanese yen did very, very well. We also see the bond market doing extremely well again, and we talked about this in the daily brief. I don't think it's necessarily that the interest rate being paid on the bond is the driver, which we know are very, very low, and in some situations like Europe, they're actually negative interest rates. This is more just a question of, is your principal guaranteed by a government, which carries a lot of weight in like the broader financial market consideration. As well as sort of another flight to safety proxy, gold here. I don't think this is anything to do with inflation. This is to do with we have no confidence in the US dollar, i.e. empire tops and look out below on dumps in the US dollar. Can't be a buyer of any of these markets up top here, but we just need to acknowledge the trends are very strong. The markets have gone very far. And if we did want to be buyers, we have to wait for some sort of consolidation or pullback. The interesting thing about all of this is that Bitcoin, I think, is a flight to safety proxy, and it's just not participating as much as yen, gold, and bonds, which is a bit suspicious. And maybe Bitcoin has to play a bit of catch up. I don't know. Moving on, stock market fell out of bed last week. This is a weekly price chart. We've opened up kind of weaker this morning. Looking at the, this is a 4-hour chart. You can see the gaps all over the place. And we talked lots in the daily brief this morning about if I did want to be a buyer of US stocks, I think you probably really want to concentrate on things like reload zones. And this would be a reload zone within a reload zone, 78.6 level right there. Candle body lows. And we also have this really interesting high to low trend line that is support there. So it doesn't surprise me that stocks need to come back down here and clean up. And if there's going to be a long trade, I really like the idea of hunting it right in here. That's still a big if right now. So let's see how she acts as we come back down into these levels. I'm sure you're hearing all the bleeps. I got to keep moving on here or we're going to be here all day. So stocks, on the weekly basis, big old tail, wicks and tails like to be eaten. I still think there's still a bit more business that needs to be done down here. And of course, like we said, if bonds, gold, and yen are all moving higher, that's not bullish of stocks. Speaking of stocks, mentioned this one in the daily brief this morning. This is a weekly price chart of this Aptinix. No idea if I'm pronouncing that incorrectly or not. As bottom fishers, I love hunting names like this. You can see the weekly W that's trying to form down here. And this guy's got an awfully long way to come back on any kind of counter trend rally. So in our TRI SOF Options Club meeting tomorrow, we're going to be reviewing this name in earnest and seeing if there's some options we might want to pick up on this thing. Because usually pharmaceutical stocks do better if the broader market looks weak. As we had sort of said just there a moment ago, Bitcoin as sort of a flight to safety name hasn't enjoyed as much of a rally as some of the other flight to safety names, but nonetheless still uppy and really important. I think the most important thing was yesterday's broiler chicken show. We talked about this. Were we going to get a clothesline M potential top coming up here? And yesterday's Sunday close, they actually closed this slightly higher. The close here was 11,528, and this previous close was 11,469. So as a result, no M top. We have higher highs and higher lows defines a bull market. And of course, if we change that to a line chart, you can see how that was just barely a new high. And interestingly enough, I think you can actually make the argument off of these clotheslines that we could actually even see a nice little AB equals CD, which takes us, interestingly enough, right back up into the original AB equals CD target. In this case on stamp, this is 13,600. If I show you, where is it? Of course, you can never find it when I wanted it. Oh, I guess this is it. This was the chart I was showing you guys in the broiler chicken show yesterday. The original AB equals CD, AB, CD off of the entire wicks and tails took us up into this level as a AB equals CD objective. And now this clothesline AB equals CD is taking us up into that level. Again, that was the mountain man level. And so I put a tweet out this morning basically saying it sure looks to me like Bitcoin really wants to print a 13,000 weekly close line level there. And what's interesting too about that as well is that Goldman Sachs this morning came out with a huge bullish price objective on Bitcoin of 13,900. No, I mean, that's actually a pretty small objective, but nonetheless, they are also looking for a move up into that area. And given the talk just a moment ago there about AB equals CDs, really, that doesn't surprise me if we see that move. And also, too, I'd like to see Bitcoin actually do a little bit of performance here to catch up with the other flight to safety names. Last idea we'll leave you with here this morning in the crypto space, this ETC trust. I mean, I suppose we could look at ETC, the coin itself, but really interesting. I'm going to be hunting a trade set up on this. You can see the original weekly double bottom that came in at $9, and gee whiz, this thing rallied all the way up to $40, $50. I mean, just a monstrous move, and then bam, right back down in the pooper. But it's interesting that coming back down into the pooper, notice here we are in trade location. So we can actually make the argument that, this market has tried to clean itself up. And if we can find any sort of signs of divergence, signs of W's, I could realistically go and look and pick up some of this, just simply risking against these lows. So not only did we give you an idea here this morning, and keep in mind, this is still very early, right? With three-step setup, we look for location, we look for signs of divergence, then we look for signs of market structure. I think as it stands right now, we can make the argument that, especially if we drill down to something like the daily chart, we've got that location. We've got a tentative divergence, not really the best. In fact, actually, no, I'm going to say it, take that off. That's not a divergence. It's sloppy, and I sometimes don't like when MACD does this. Willie is egregiously oversold, but where are the bulls? I don't see any bulls anywhere in sight. So I'd like to see a little bit more indicator confirmation of a bottom. And then, as I said just a moment ago, the final piece is, do we get a W in price? You can see the W is trying to form here. So I think this is definitely something you want to keep on the radar screen. There might be a nice little trade setting up here for you guys. Okay, I think that's basically the summary I wanted to give you. Gave you a couple names to chew on, one pharmaceutical name, one actual crypto name, and we talked a little bit about broader market and potential setups there. All right, guys, have yourselves a great day. All the best, and bye for now.